The information provided on this podcast is intended to be educational and informational only and is not considered to be formal legal advice. The listener should not take or refrain from taking action based on its content. Any listener in need of legal opinion upon which to rely in decision-making should consider formally engaging an attorney to review relevant facts in detail and examine the pertinent law as it applies to those facts.
Welcome to Real Estate Milestones, where we explore fascinating topics in commercial real estate with knowledgeable industry experts. I'm your host, Ben Malech, and I'm a young real estate professional who is passionate about adding value to people's lives through the incredible power of real estate. My goal is to help you discover what the heck is going on in the industry and how you can get involved. This is Real Estate Milestones, where your future in real estate lies just around the corner. Hey everybody, welcome back to Real Estate Milestones. Today we got Perry Zheng, who's the CEO of Cashflow Portal, which is a modern real estate software company and product that we're going to learn a little bit about today. He was an engineering manager at Lyft for 5.5 years and worked as a software engineer at Twitter and Amazon. So an interesting background into real estate, which not all of us have, but he was a lead sponsor on 850 apartment units and has raised over $20 million for real estate projects and had a pretty good return for his investors. So Perry, thanks for coming on the show.
Thanks for having me.
Great. So could you tell us a little bit more about your story, about your background, and then tell us about your first milestone in real estate?
Yeah, absolutely. I came from an engineering world. I still live in Seattle. After graduation, I got a job in a tech company, work as a software engineer throughout my life. And I started single families about 5 years after graduation, bought a first condo in the Bay Area. I house hacked that, then start buying more single families. I end up with 7 of the single families in the Bay Area and Seattle, and truly exhausted my debt to income ratio. So then I got into multifamily. Our very first syndication is in 2019, which is a 172 unit apartment complex. Out of the $4.3 million, I raised 3.5 of that. And in 2020, I was a lead syndicator on a 408 unit. And 2021, I was a lead syndicator on a 236 unit. The milestone could trace all the way back, but I will say my first true milestone, which ties into technology and real estate, is on that 236 units. Because at the time, I was still actually working as a software engineer manager at Lyft, and I couldn't disclose that I owned a software company per se to my investors. Before, when I was raising money, I either used DocuSign to do all the paperwork, or I use a software company that handles all the paperwork, cap table management, etc. And 2021 was the first time I used my own software for the paperwork, all the document signing, all the distributions, ACH, monthly communications. And my investors, my LPs, were like, Perry, I actually like this software better than what you were using before. And that was probably the biggest milestone, because that was the impetus for me to quit my job and go full-time on my startup. And now it doesn't feel like work. I own a software company, and it feels like I'm doing what I really like, which is technology and real estate.
Awesome. Yeah, it's a great background and very interesting. So I guess, how did you figure out real estate, or how did you even learn about real estate originally as someone in the tech space, probably pretty busy also?
Yeah. So that's a good question. I think for the audience, if you are a aspiring entrepreneur, or aspiring someone who wants, financial independence and retire early, I had the same mindset, which is I want to find some kind of passive income. And I was in the Bay Area at the time, and I was trying to buy a house. And honestly, I didn't do that much calculation. It wasn't like I was a real estate investor back then. My very first house, the only decision calculus was that my rent by buying a house being defined as the rent I receive from other rooms of this condo minus the mortgage, that's my effective rent. As long as that rent is less than what I will have paid by renting somewhere else, that's a good buy. That's all I thought about, right? Like, it's a terrible decision calculus. Now, looking back, I think I should be more savvy than that. But that was the only decision I made. And it wasn't until I bought my first house that I start reading Rich Dad Poor Dad and listening to Bigger Pockets. So I will say, how did I get started? You get started by taking action on buying the very first house. And then only after you have that first house do you have something to go off with.
Great. Yeah, that makes a lot of sense. And I'm glad you figured that out early. And glad whatever calculus or math you did ended up down this rabbit hole. So cool. Well, something that I'm really curious about is because I've recently been, talking to some engineers and hearing like some engineers on podcasts, and it's like the way that they approach problem solving is very different than you learn in other fields of study. So I kind of wanted to understand, how does an engineer think, and how do you think as an engineer? And then after we can apply that to real estate.
Yeah. Engineers, in very short sentence, engineers, the best engineers think in first principles. They one of the biggest traps in investing is you try to figure out what other people think, and then you try to do what's called groupthink. So there was a famous psychology experiment where people are asked to write down what they think are the top attributes of a good CEO, right? And then they were asked to think about what other people might think are the good attributes of a good CEO. And then finally, the third question is, what do you think other people think are the good attributes of a CEO? And what happens is that those three answers are completely different. In investing, if you go with first principles, which is real estate good or bad? And I need a place to live. I guess it's good. That's very, very easy, deduction, first principle. Everyone needs a place to stay. There are more people renting than buying. That means the rents should go up, right? That's first principle. But then the second way is, what do other people think is going to happen to real estate? Well, people think that real estate is going to crash because stock market just crashed and the crypto just crashed. And so everyone else might think that real estate is going to crash. But that's what other people think. Nobody knows if that's a true statement. And then the third one is, given that everyone thinks it's going to crash, so I should also not buy real estate. Like, that's like the third degree of interpretation, which is definitely the wrong interpretation. So what that means is a good software engineer doesn't look at headlines. That kind of information is misinformation. It is not based on first principles. It's based on like what the journalists said, and they don't know anything better than anyone else. So that's one thing I learned. I'm not saying actually that all software engineers can think from first principles. In fact, some of the engineers I know are very emotional, which is ironic because their whole training is to think logical and not like buy into the hype or the mishype of things. So yeah, that will be my answer. Is I try to be contrarian and right, but I know I'm very contrarian since the very beginning.
Well, that's an amazing answer. I couldn't ask for a better one because definitely gets down to the root of what you learn as a software engineer, and then good application to real estate. And I think it's really interesting because I study philosophy in school as well as finance and management. And when I learn like logic, it's like, and then I also like I've taken a couple of Python courses. It's like, wait, like the logic that I learn and love from philosophy is like very much the same thing as the logic in Python. The one thing is I'm really bad at the syntax, so I can't really do anything in Python, but it's like the logic makes sense. It's like I see how it could be applied, and then at the same time, that logic I apply that logic to real estate and come up with my own theses and, improve my models by making good assumptions. So, yeah, I really like that way of thinking. It's a interesting answer.
Mhm.
So okay, so let's get into a little bit about what you're doing now. So, what's cash flow portal?
Yeah, Cashflow Portal is a marketplace. It's a community for investors to learn about real estate syndication, connect with sponsors on real estate syndication, and also to invest directly with syndicators. So that's on the front end. That's for a typical consumer is you are working as a software engineer, you're making a relatively high income, and you're looking for passive income, right? And you tend to live in pretty affluent neighborhoods if you are a software engineer. I'm generalizing, not everyone. And you are pretty probably busy with your job, and you're looking for ways to invest directly with a syndicator instead of putting your money into, say, a stock that you may or may not have control over, right? And so we provide a platform for you to learn what is real estate syndication and be able to connect with the source of that syndication, which is the sponsors. Sponsors are kind of like entrepreneurs, right? And then finally, be able to invest with them. We provide all the process, the end-to-end back office. So you can sign the paperwork directly on the website. You can see how much you invested, what your distributions, what your monthly distributions, and you can put in your bank account so that the money automatically goes into your bank account, the cash flow. The expected returns are like 6 to 8% cash and cash, and then like 12 to 20% annualized return, which that's the historical, and which is better, way better than S&P, and it's a lot less volatile and more stable. So I think we are in the early stages of a real estate syndication boom, and right now it's taking a step back because of all the economic conditions. But I think real estate syndication is there are two benefits of real estate syndication. The first benefit, I mean, people listening to this audio or podcast may have heard of real estate syndication, but so the two things I'm going to mention are slightly different. My first interpretation of real estate syndication is, by the way, for those of you who don't know, the summary is real estate syndication is a process of putting money together to buy a piece of real estate larger than any single individual can buy. It consists of GPs or general partners that do all the work. And on the other hand, it also consists of LPs or limited partners that don't do any work, but invest $50,000, $75,000, $25,000 to participate in a investment opportunity and enjoy the upside. Now, the first point I want to make there is real estate syndication is basically geographical monetary arbitrage, right? It's taking the money from affluent folks, right, from the coastal cities and put them into cities such as Atlanta, Dallas, Houston, San Antonio, Alabama, Memphis, Kansas City. And that's a good thing because it creates win for the investors, it creates win for the GPs, and it technically creates win for the tenants who enjoy a higher class of living conditions or living asset, right? So that's my first interpretation. It's moving money from the rich cities to the still the really good cities in America. And then second is if you move, so at the beginning I said I started with single family, right? And then now I move into multifamily. As you move from single family to multifamily, I believe that the reward minus a reward divided by work ratio, so reward divided by work ratio approaches infinity, right? Because you pretty much don't have to do any work in order to enjoy the upside, right? Your job is to find the best person to manage the project, and so on. So most people don't have time. Most people want financial freedom and passive income, but they want to find the right way to allocate that capital. And so we believe that, like, I believe as an industry, this is going in the right place because anything that approaches infinity is a good thing.
Definitely, and I love the logical programming way of describing that too, which is definitely a great reason to have you on the show. But yeah, I really like that idea. So I mean, the way I think about syndication, it's doing something that you could have done by yourself by teaming up and pooling resources and sharing in skills in order to accomplish something that you couldn't. And so I know a lot of people think about real estate as a place for passive income, a place to grow wealth, especially a place to diversify out of the stock market. But people just immediately go to single family homes, which obviously makes sense. You probably live in one. You've seen many of them. You've been to many of them. But then people like think about acquiring one. Like, wait, this is a lot more work. Am I really financially free if I have to spend this many more hours managing this for a couple $100 more a month? And so I guess syndication. So yeah, I really buy into that logic for why syndication is so valuable. That really you provide your money and you have someone that you trust manage an actual business plan where they will add washers and dryers to a property, maybe repaint, change the appliances, make it look modern, and therefore someone's willing to pay more rent as a tenant, and then it adds value to the property, increases the cash flow, increases the value of the property, and when you sell it, you make a profit. So when I discovered syndication, it was because I was investing in Apple, and I was like, wait, I can't call up Tim Cook and ask him what the heck's going on. And so I was like, wait, but if it was someone who I knew, who actually knew, trusted, and liked doing it, and also providing a better return, tax advantage, sounds like a lot of good stuff. So
That's
yeah,
exactly right.
appreciate that explanation.
That's a very first principle approach explanation that you did as well.
Yeah, no, I appreciate that. That's a compliment for a philosophy major also.
Yeah.
Great. So I'd love to hear a little bit about your personal influence for creating Cash Flow Portal. Obviously, you have a background in software engineering, so you have the skills to create something for yourself. But you're also a GP on some deals. So were there any pain points that you're specifically relieving from when you had to deal with that as a GP? And then also as an LP, are you relieving any pain points with your software as well?
Yeah. So as a GP, so a little bit of background. 2019, we did 172 unit. On that deal, I was using DocuSign for signing about 75 investors' documents. They will sign the DocuSign. They will send it back to me. I countersign it. I send them an email with wire instructions. They send the wire. I look for the wire in my bank, and then I send them another manual email saying, hey, the wire has been received. I have a spreadsheet that keeps track of everyone's investment, first name, last name, entity name, their address, and their social security number, and how much they invested, and how much distribution they should get. Every time when an investor wants to change their address, I go into my spreadsheet. They have to email to me. I go into my spreadsheet and I change the spreadsheet, right? And every great startup starts with a spreadsheet. And so that's the very first iteration. In 2020, we use a very large company for our equity raising. And I said, well, this is pretty good. But I was working at Live at the time. And it felt like the engineering bar in the commercial real estate space is not that high. It just felt like, man, why are there so much glitches that if this is a glitch that's happening at Live, like we'll fix it within like 12 hours, or we'll fix it literally in 2 hours, because this is a big glitch. But for whatever reason, the software, it just doesn't really get better. And there's a part of me that felt like, man, I worked at Amazon and Twitter and Live, and none of this software is as good as the companies I worked at. What happens if I bring my skill set into this space, right? So in 2021, I do it, and that statement turned out to be true, that that the engineering bar is much higher when the Silicon Valley and caliber of engineer is brought into commercial real estate. We innovate so much faster. We have amazing customers. We are growing super fast. Every month is a record high in revenue and users, and so far we have 0% churn. And so that's all true. What I didn't know is it is my first time founding the company. I'm a first-time founder. So I don't know about sales, I don't know about marketing, and I don't know about basically everything else besides engineering and product. And so that is the part that I had to learn a lot. Okay. Thankfully, we got into a incubator program called Y Combinator, YC for short. It's one of the pretty famous startup incubators in Silicon Valley. So Y Combinator is some of the most famous alumni include DoorDash, Stripe, Airbnb, Dropbox, Instacart, and Brex. So I think what there are a few things I learned from YC. Probably the most important one is how to be concise and to the point. All Y Combinator interviews are 15 minutes long, sometimes even 10 minutes long. And it's incredible that in 15 minutes, they were able to talk about some of the bottlenecks or some of the fatal flaws of my thinking in 15 minutes. And I've sometimes talked to 2 hours with someone and they still don't really get the business, right? So that was just a showcase of incredible precision. So that's helpful. And they also, the other thing I learned was going into brevity. Someone, I think it's a president, a U.S. president used to say that if you ask me to give a 2-hour speech, I can be ready in a week. If you ask me to give me 1-hour speech, I can be ready in 2 weeks. And if you want me to give a 30-minute speech, I need about a month to prepare. But if you want me to talk to 5 hours straight or unlimited speech, I'm ready now. So the less time you have to explain something concisely, the more effort that it requires. And I didn't know that me being the founder, that's my job to phrase things in a way that is concise and compelling.
Yeah, that's pretty interesting. Yeah, I know. I've definitely heard about Y Combinator. I listen to a lot of startup podcasts and things like My First Million and All In podcasts. And so yeah, definitely.
Oh, you listen to All In podcast. That's a great podcast.
Yeah, it's a great rundown of everything going on in the politics and economy and tech all in one. So it's definitely a good one. But yeah. So I guess where were we with the software? I guess maybe now's a good time if you anyone who's watching this on YouTube, we could maybe see a little bit a demo. But yeah, if you could just kind of walk us through your product in a little bit more detail for the people who are on audio, while video can see it too, that would be pretty cool.
Yeah, so let me do that really quickly. I am going to share my screen for those of you who are on YouTube. And so the first thing you'll notice is that I will assume that a lot of the people on the audience are investors looking to make their first, investment as a limited partner. And by the way, if you want to become a syndicator one day, it's important that you make one investment as a LP, because otherwise it's really hard to be fiduciary of someone else's money when you haven't been on the other side. You see what I'm saying? And most general partners, how do I put it? They usually do a few single families already, and they also invest in someone else's deals, and then they see kind of the whole spectrum, and then they gain enough knowledge so that they can do their own deals. So it's like doing your first general partner is kind of like going to college. It's actually 12 years of education before you go to college, right? So there's that. All right, so you're looking at this marketplace. On the marketplace side, you can see there is a list of investment opportunities, right? And then so you have the minimum investment is 100,000, the IRR is 13.7, which translates into a 16.4 annualized return and a 1.82 equity multiple over 5 years, right? So there are a bunch of these 506C investments. If you're not sure what 506C is, it's basically those investments that you can publicly advertise, Okay.
Mhm.
Then underneath, you see a list of people's profiles. Now, why are people's profiles important? Because in order to invest in with a GP and to see their private deals, SEC, the Security Exchange Commission, requires that you and the GP have a relationship, a substantive relationship. That means you need to know each other before they can tell you about their deal. So that's why this whole marketplace is built like a social network. So here I am going to click into Tony. So Tony's saying it loads really fast, and Tony is a lead sponsor, and Tony is looking for investors and co-sponsors. Okay, investor is probably the audience who is looking for to invest with Tony, right? You cannot see the deals because we want to be SEC compliant, but you can see this person's history and track record. Tony is a sponsor of 691 units. He has $118 million of portfolio value. He invests in 176 units himself as a passive investor. Tony is the founder of Novo Multifamily Group LLC, and he is highly respected with 25 years of experience on portfolio management, and he's affiliated with a mentorship group, right? Now, Tony lists out all the podcasts that he appears on as a guest. And so
Wow.
as an LP, you can actually check them out. And, like Ben, feel free to tell other GPs to fill out a biography like this so that they can get more exposure. And then underneath, you see a list of sponsored deals, right? Where this is a 20 unit that Tony syndicated. This is a 60 unit that Tony syndicated. And there's a 396 unit that they syndicated. And then these are the deals that Tony invests in passively. So this is a very, very beautiful layout, right? If you look at it from a mobile perspective, that's
Wow.
also beautifully laid out, right? So that's what I mean by we are good in technology, as in like, whatever we build is pretty high quality. Now,
Yeah.
as an LP can add a personalized message, which is like, hey, Tony, I would love to get to know you, and I would like to add myself to your investor database, right? So then the LP can say, I am accredited. I want to invest $100,000, and my timeline is 3 to 6 months. I live in Seattle. I am very likely to invest. I am a tech entrepreneur. I can share my income and net worth if I want to, but usually I don't do that. And I can share my previous investment summary, and these are my investment goals, right? And then I go ahead and share this qualification form with Tony. Then Tony and the LP go on a call, get to know each other, and the LP will get to know about this Tony's upcoming investment opportunities. So what problem are we solving? For the LP, we are solving the problem that nowhere in the world can you get 12 to 20% annualized return that is stable, consistent, not volatile, and recession and inflation resistant, right? Nowhere, right? That's a compelling reason, but not everyone knows that it can do that. So there might be skeptics out there. Fine. For the GP, the problem that we're solving for them is that they want more investors. They want more LPs, right? And that's a real problem. And then the problem that I want to solve is I want to create a community where the LPs can learn about real estate syndication, can connect with people who are good at it, and be able to retire and invest. Yeah.
Great. Well, let me just say that anyone it's cashflowportal.com for anyone listening who wants to check it out. But yeah, just looking at this demo, it's definitely beautiful. I see the Silicon Valley influence, the simplicity, the speed, the just the overall like good looking thing. So that's props for you for that. Definitely need some of that in the real estate industry. So yeah. And then so yeah, how do you make money? How does the business work? That's I want to get kind of under the surface.
Yeah, absolutely. So before I talk about the revenue model, I want to talk about that what I just showed you is the connection piece, which is the LP comes on to find the GP they want to talk to. Once the LP is ready, they can click into a deal. And on this particular deal, you can see that this is a 506C offering. You can see the summary. You can see about the offering, and you can see the documents and so on and so forth. You can watch the webinar, which will open up in a different tab. And then the LP can actually click on invest now. to go inside the investment funnel. And this is also a beautiful layout where they can create a profile and they can invest. And if it's a 506c, we also do the accreditation directly on the website. So as you can see, it's going from learning to discovery to connection to building a relationship to actually investing and all the post-investing logistics like document signing, ACH, monthly updates, K1s, tax documents, disposition, So
How about
it's an end-to-end.
cash flow and things like that?
Yeah, exactly. Yeah,
Oh,
that's
wow.
exactly right.
Nice.
So that's the value. Now, so then your question is, how do we make money? The LP is absolutely free to create an account. So for the same reason, you can create an account on LinkedIn. Like LinkedIn does charge you for money, right? To create an account. You can connect with as many people as you want, and we also don't charge for that. The GP can create an account for free. So where does the money come from? When the LP invests with the GP needs a software to manage all the investor signing, like this whole process, right? So if I go into the GP view, you can see GP actually see a list of investors. They can see the distributions, they can see the documents, they can countersign, they can verify if someone is accredited. That software we charge based on software as a service model. It's a monthly fee. And that's very, very affordable. So we charge from the GP. So if I go to the pricing page, if someone manages about $1 million, it's $99 a month. And if someone manages about 5 million, it's $228 a month. And if someone manages, say, 50 million, it's about $1,000 a month. Okay, so
Yeah.
that's how we make money. The
Great.
second way we make money is that if we help the GP raise money, say we help them raise $1 million to $2 million, we will have an equity stake at the deal, which meaning we are a co-sponsor on the deal. So you can imagine that if we make this happen, it could snowball, right? That's why we don't charge for anything. We actually want to make money in real estate, and we want to facilitate that real estate transaction. Our goal is to be one of the largest co-sponsors there is, right? By facilitating and building that community between the GPs and the LPs.
Yeah, well, that's interesting.
Does that make sense?
Yeah, I didn't think you had that last part last time you were on a podcast. So yeah, that's very interesting, and I really like that, especially as someone who's likes real estate, and this is a great way to also get exposure to that, and yeah, it definitely shows an alignment of interest as well. So yeah,
absolutely.
very interesting.
Sure.
Great. So yeah, well, that was all really helpful. Thanks for sharing that. Well, I don't have too much more for you before we get into the lightning round, but I guess the one question I wanted to have was, you've worked at a bunch of famous companies that a lot of people are familiar with, like Lyft and Twitter and Amazon. I want to know if you could tell us anything that the public wouldn't know, not like secrets, but like things that you only know if you know someone in the industry, like that maybe interesting things about working in tech or working at those companies.
Yeah. Something that people outside of the industry may not know is a typical, really good software engineer will be making mid six figures. So if you are really, really good and you work at one of those big companies, 600K total compensation is very typical. And if you are really, really good, you can actually make about 2x that even as a software engineer, as a really good software engineer. Especially at the time the stock is really high, you can make almost 2x of that. So that means what I have learned is that it's very hard for a software engineer to give up their job and pursue other passions. So it's a golden handcuff. That's what I've learned. So that's one thing. Out of all the companies, I have the most career growth at Lyft, where I learned to become an engineering manager. Amazon taught me to have amazing customer obsession, and that is something we bring to our startup. And the fact that I'm in Seattle, I'm just you can call it drinking the Kool-Aid, but I think it actually works. Okay, so that's helpful. And that's why Amazon is one of the best companies out there.
Mhm.
And Twitter is really good at building this amazing engineering culture. The people I worked at Twitter are some of the smartest people I've ever met. So I learned just the good things from everyone. Yeah. So I will say in retrospect, I probably quit my job a little bit too late. But I also had the golden handcuff.
Yeah, well, it doesn't sound like the worst salary to be getting as a either way. So yeah, I guess someone if you don't know what you want to do, maybe think about software engineering.
Sure.
Right. Well, great. Well, I appreciate sharing that too. That's very interesting, and I'm glad that you've brought some of the best parts of the best companies to your own company, which is great. Awesome.
Yep.
Well, appreciate that. You ready for the lightning round?
Absolutely.
All right, let's do it. So first, if you could have any superpower, what would that be?
Any superpower, what would that be? Man, I think every time I do this, it's slightly different. Right now, I will say, honestly, it's the ability not to worry too much. That it could be my Achilles heel. When I make a decision, I think about 20 different things that could go wrong, and then make the decision that things do. But I worry about the bad consequences of all the things that could go wrong, and that could take a toll on me. So if I have a superpower, I don't want a crystal ball because that will make life too boring, but I wish I can think a little bit faster so that it doesn't become a stressful process.
Yeah. Well, at least you make the decisions too, so that's important because sometimes you get analyzed for so long that you don't even make a decision, and we know that that's not good for a startup.
Yeah. Mhm.
So, what's your favorite book, or what's the one that's helped you the most?
Yeah. The quote for some bubbling entrepreneurs will be, of all words, tongue and pen, the saddest are these. What could have been? That's the quote. Of all words, tongue and pen, the saddest are these. What could have been? Which means fast forward many years, if you want to scratch your itch and do something that you think you know the best in a very particular niche, go for it. When I started the company, I could very honestly say that there was 10 syndication software companies at that point. And everyone told me that it's not a good idea to start. It's saturated. And the people who don't know about this space think that this is a very niche space, and that it probably will stay this way for a long time. And that's all fair. I just like it, and I don't know why. I actually don't know if it's gonna work. But I think by doing it, I will have the least regret many years from now. So that was one of the biggest impetus for me to quit my job.
Yeah, well, great, and it's definitely makes sense. So what motivates you to continue every day?
Ah, um, that's a good question. So people ask me, what do I work? And people say, "Oh, you are very efficient with time. You are very competent." And I agree. But I don't think I am efficient with time. I really don't think. Um, and the reason is I actually consider myself a very lazy person. And what I mean by that is, if you ask me when is the day I do my taxes, I always wait until October to finish my taxes, right? If you ask me, how, there are a lot of things I put off. So I'm not a like on time person. However, I am very good at doing everything I can to get what I want. Like it's legally and do it the right way. But like if I want something, I will think about every possible way to get it. And every day when I wake up, and now I really like my job. So it doesn't feel like work. It feels like as soon as I respond to that first email, I can spend the next 1 hour just doing work, and I didn't know the time has passed. And if I have to be introspective, the reason I can do that, I think, is because it's become a habit. It's unconscious at this point. I don't know why I'm very efficient, but I just happen to be efficient at this work domain. But I'm not efficient in real life.
That's very interesting. Well, do you have a favorite book?
Yeah. The one of the favorite books, there are two favorite books I've been reading. And this book also keeps changing. So the book I really, really like right now is this book called Traction. And I will say, people, don't read Traction if you are just starting out. Read Traction once you have product market fit, because it's a lot about management and scaling the company. And you don't need that when you are like trying to find that first idea, right? And if you want a book on entrepreneurship, there's a book called How to Get Rich by Felice Dennis. It's actually not a self-help book. It's more about a tale of entrepreneurship, which is massively interesting.
Yeah, that's awesome. Definitely gonna check it out. And I was thinking about reading Traction, but at the same time, when I read the back, I was like, yeah, I think there's some other things I should definitely read first. It was a little bit dry too. It's like, wait, do I really want to get into this?
It was so dry. And it has all these acronyms, and it's written in the 80s, right? Or like 90s. And I was like, this is so old-fashioned. So yeah, I never it took me forever to finish the book, because every few sentences I had to think about how this applies to my organization, and then I stopped reading. Right. So it was very dry. It's basically like an encyclopedia.
Yeah, that's what it seems like. Yeah, so I was like, this is not casual. So right.
That's right.
So yeah. So what advice would you give to someone who wants to follow in your footsteps?
I think my advice is, nobody knows the answer. Yeah. You might look up to people that have been there, or but they don't know the future either. If you believe you are smart and you're competent and you can do it, I would say go for it. Yeah. When I was starting out, there were some really good syndicators that told me that, hey, it's really hard to find differentiation in this market, in this product. It's actually really hard, and it's a small market. So it's like, I just don't see how anyone could become your customer. And so that was the skeptics. And then, a year and a half later, they became our customer. So that was one of the best, turnarounds. So nobody knows the future. So, but it will take everyone about 3 years to go from having an idea to finding reasonable amounts of traction and product market fit. And so the only way you can show is by doing it. And the other thing I will say is, if you are thinking about doing anything extraordinary or something really awesome, is you wouldn't know what it takes until you do it. And don't worry about that you don't have the skill set to know it, because if you know how to do it, then everyone will have been doing it, right? So what I mean by that is, you're gonna be a different person running a successful business by the time it's successful than when you first started. When I started, I had no idea how to sell, how to market, how to do anything. Everything I learned on the job. Yes, I know how to code, sure, but that's like a very small part of building a business. So don't worry too much about, do I know this, or do I need to know this, or do I need to learn this? Yes, you will, but learn it on the job. Don't learn everything and go do it, because learning everything is not sufficient for doing it. Yeah. So don't really listen to people if you believe enough of what you want to do.
Yeah, that's great advice coming from someone who's actually done it. So I appreciate that. Yeah. Well, lastly, since I put you on the spot, I want to give you a chance for revenge. So feel free to ask me anything you want to know about me.
Yeah. I want to ask, what is your 3-year goal?
3-year goal.
You have this podcast, you have, yeah.
So I think there's this one milestone I'm trying to accomplish, which is 10K of passive income per month.
Mhm.
And I think when I'm at that level, that's when I definitely have my basic needs covered and some extra above that. Ability to have a little bit of a leisure and travel and providing for whoever I need to provide for. So it gives me like a really good foundation to start. So I'm looking to get to that level where I feel like that's it's a little bit beyond maybe financially free, but like financially like comfortable, it sounds like, so
Mm.
that's what I'm trying to achieve. And I think 3 to 5 years is not out of the question whatsoever. I think it definitely could be done. So yeah, I guess first I'm looking for a way of creating the income on the front end where I can actually deploy it into real estate or wherever I decide to do that. But yeah, so that's kind of what I'm looking for in terms of that. But the path to that is there's a lot of different questions. I'm in a very there's a lot. The place I am in life has a lot of possibilities that stem from it in terms of like going down a job or starting a company or what part of the real estate industry I want to
Mhm.
have a job in, or who am I going to work with. There's a lot of unknowns, but it's very exciting, so I'm excited.
That's awesome. I love that goal. Yeah. And I am not going to give any advice on what path you should go down. Choose the one that's most befitting.
Yeah, it's
Yeah.
interesting, but I really want to look into myself and look into my own values and see what is true to me. And I think it's a good time for introspection and learning a lot of tactics in philosophy class too to do that. So
Yeah.
great.
Yeah.
So I guess is there any final remarks you have for the audience, and is there a place for people to find out more about Cashflow Portal and about you?
Yeah. To find out more about us, simply go to cashflowportal.com. You can register a account for free. You can click on the marketplace to connect with syndicators. And in the upper right-hand corner, there's a button called Schedule a Demo, and you can schedule a demo with our team. And if you ask for Perry, I will be there as well.
Awesome. Sounds great. And this last question, I just thought of it. Are you still looking for investors, or like where are you in the capital raising or the venture startup,
Yeah,
series of events?
we are looking for strategic partners. So if you know anyone or anyone who's interested, can come chat with us. Right now we close our round, so we are not having a round open. But in the future, we always want to look for customers and or even just investors that want to invest their capital, right? Because sky is the limit on what we can build.
Right. Well, maybe one time you'll see Cashflow Portal on Cashflow Portal. You want to invest in
Sure.
Cashflow Portal? That would be pretty funny. Awesome. Well,
Actually, my second part of the equity raise, we use Cashflow Portal to raise for Cashflow Portal. So that was great.
nice. I
Yeah.
love to see that. That's pretty cool. That's
Yeah.
awesome. Solving your own problems. Well, great guys.
Right.
Everyone, check out Cashflow Portal. Definitely sounds like a great resource for anyone trying to learn more or find a way into syndication. Perry, thank you very much for coming on the show. It was a pleasure to have you. I learned a lot, and I know everyone else will. And everybody, keep making milestones. Before you go, I just wanted to say thanks again for tuning in to another awesome episode of Real Estate Milestones. If you've been enjoying the show and you'd like to offer your support, please leave a 5-star rating and review on Apple Podcasts. It's the best way to increase the show's visibility and help the message get out to a greater audience. I really appreciate your time and support, and keep making milestones.